Hi there, and welcome to this very special Sydney market research report about what's happening in the Sydney market. Over the past 18 years, we've specialised in helping Australians invest in the major capital cities around Australia, and I love every capital city, and certainly Sydney, being the city of my home, is a special one. But let's have a look at what's happening. What are all the data, research and insights into this market that investors need to know? So a lot of what I'm going to share with you is shared regularly with our customers, and we hope it's of value to you too. I'll be talking about the economy, supply and demand. We'll be talking about the rental market, capital growth outlook for 2024, and a 2024 market talking point. So let's get into it. Let's talk about the Sydney market in 2024. Now, the first thing to talk about when you're looking at any city is the health of that city, and that's the lifeblood, if you like, the economy. And what we can see here in relation to Sydney, if we look at the CommBank State of the States report, you can see that it's got a pretty good report card. It's number 2 nationally for economic growth, number 2 for construction completion, and then number 3 for dwelling commencement, which is great, but I wouldn't get too excited about that because that's off a very, very low base. Everywhere around Australia is struggling to be able to build new properties at the moment. Now, the economy is often judged on its unemployment rate, and as you can see here in Sydney, certainly New South Wales rate is 4.1%. Now that's 21% below the 10-year average, and what we're seeing is we're still seeing incredibly high employee demand, which is important not only for the economy, but it also attracts new people wanting to move to the state. Now, property demand and supply are obviously the fundamental things that drive prices, and so obviously this flows into the population, which is booming at the moment in New South Wales, as we can see. If we look at pre-COVID, during COVID and post-COVID, you can see that there was literally a lull, like a vase, if you like. It went down and then it came straight out the other side. We can see from 100,000 people just before COVID hit to 186,000 to the 12 months to the end of September 2023. That's an 85% increase. And we can see that the numbers that are coming to New South Wales are absolutely incredible. But where are these people going to live, ladies and gentlemen? This is one of the big challenges. And during this time, it's actually a time of inflation. It's a time when it's actually taking longer and more difficult to supply new properties. There is what we're calling a supply crunch. We can see that in terms of new supply, in terms of approvals. There's a 20% decline in approvals compared to the 10-year average. That is not good, particularly when we need actually more, not less than even the average. And if we look into drilling down into the apartment market, we can see here, we've got the lowest number of apartment launches in 10 years. We've got the lowest level of commencements in a decade. And whilst the number of completions will be slightly higher in 2024, it's nowhere near what we need. And certainly the research house Charter Kramer, which this data is from here, they're predicting that it's going to stay severely undersupplied and going to really struggle to play catch up in this kind of environment. And if we have a look overall, when we've done some analysis with some of our internal research team, we're predicting that there's going to be at least a further 20,000 shortfall of homes over the next 4 years. So supply is not going to get better. We're not catching up. It's actually getting worse when we actually need more. So it's a pretty extraordinary situation. And the one data that I suppose is the easiest to read of all of these is in the rental market, where there's literally a no vacancy sign outside at the moment for Sydney and other major cities around Australia. We know a balanced rental market is where about 3% of properties at any one time are vacant, but we're looking at about 1%, 1.1% in Sydney, and this is not predicted to increase. And this is a market when you're at this level where rents are increasing, as you can see, 10% for houses, nearly 9% for apartments. The only downside on the Sydney market is the yield. The yields are relatively low. And this is one of the reasons why investors often struggle a little bit more to hold on to their properties in New South Wales than they do, say, in some of the interstate destinations. In terms of capital growth, of course, with Sydney, we can see here on the left-hand side, look, as of March, $1.4 million median house price and 839,000 median unit price. Almost 10% growth from March to March. But if we're looking into the future, Oxford Economics have just come up with some revised predictions in relation to growth around the country at different cities, and they're predicting 18% growth in houses and 22% for units over the next 3 years in Sydney. And if this is true, we're going to see the median unit price go over $1 million and the median house price get up towards a staggering almost $2 million. Incredible to think that this might be happening. And if that's not enough, in the background, there's another demand boost on the way, and that is in relation to interest rates. All 4 of the major banks are predicting between 3 to 6 interest rate cuts over the next sort of 18 months or so. And even if you take the middle ground there and you say 4 interest rate cuts, we're looking at a 1% cut, whether it's later this year or early next year, but definitely in terms of that, at some point that is going to hit. And when that hits, we think it'll only be a firecracker to all of the markets anyway. Now, I do want to just finish with a little bit of a talking point before I give you the final scorecard for Sydney. And the talking point really is talking about what's happening in relation to zoning and planning. What's the New South Wales government doing in relation to planning changes? Because we've had the biggest planning changes in a generation here in New South Wales. And these things are quite significant changes. Now, they're centered around 2 real things. One is transport-oriented development. So in other words, anything within proximity of a train station or a key, it doesn't have to be train, but normally in relation to transport hubs. And the second one is more low and mid-rise. In other words, encouraging more dual occupancy properties, terraces, townhouses, duplexes, low-rise apartment buildings, that sort of thing. So the one I do want to just focus on is this transport-oriented development. Literally, it's 2 tiers, and there's basically rezoning. That what they've done is the state government has just rezoned 8 key transport hubs to focus on medium to high density homes. That's tier 1. And then they've focused on rezoning to allow more apartment projects and things in 37 other transport hubs. That's apartments within 400 meters of a transport hub. Now, this is looking at providing another 230,000 potential new homes. I don't think they're going to be very affordable, would be my comment in relation to this and the way that things are going. But it is providing more properties, and it does make a lot of sense to be providing something more for people in relation to built up areas and convenience in relation to transport and things. So big supporter of these policy changes, just not sure it's really going to hit the affordability objectives that they probably want it to. Now, if we have a look at Sydney's property scorecard, overall, it's an undersupplied market, guys. It's undersupplied, and once that demand driver hits of the cash rate cuts that we're talking about later this year, early next year, that's only going to accelerate things. But we've got strong population growth. We've got not enough homes being built. We've got incredibly low vacancy rate at almost 1%, 1.1%. Rents are rising, and we've got predicted capital growth of 18% for houses and 22% for apartments over the next 3 years. So that's what's happening in Sydney, and we would love to be able to help you out with additional information and data. You may have questions. You may want to find out more about the Sydney market. You may want to find out more about other markets, or you may even want to find out more about how do you get the best properties in those projects. But what I would like to do is invite you to be able to take advantage of a free PPA strategy session with one of our experienced property strategists. Get investment ready, find out what you're capable of doing, find out how could you and how can you get a portfolio of at least 4 properties outside of your home. We'll show you exactly how you can do that. Plus, find out how to access many of the best properties, the best new properties around Australia, houses, townhouses and apartments. And if you book today, just scan that QR code on your screen. We'll give you a copy of our My City Sydney 2024, our latest edition, plus a 15-year investment plan. So book now, and we hope it is of value to you. So I hope this research report has been helpful for you. We wish you every success with investing in 2024, and have a great day.